you're looking at a market which is the most traded in the world for commodities, and if people are going to be taking positions on where it hits a bottom, they can be caught out. So it feels like everyone's standing back at the moment. You've got, and this always happens in a crash. I mean, people start setting the bottom a bit below where the price is, but now people are starting to say $40 oil it might need to go to. AMP came out and said that, and some of the pundits from the States are saying the same thing.
Now, we also, if you look back historically, though, actually oil at $20 a barrel has been quite common over the last 30 years. It wasn't until really about 2000 that we saw that huge increase. I mean, It could have possibly go back to something as low even as that?
Not based on fundamentals. You wouldn't think, the supply and demand and what it costs to produce it. But again, in a trading market where all the buyers are stepping back, it's feasible. It has been mentioned by a few people.
Now, what kind of pressure is this placing on Australian companies?
What's happened is, if it does go down to 20, you can be sure it'll bounce up pretty quick to a more, once traders think that the bottom's been set, they'll pile in and it'll come back up to a more reasonable level, which will probably be well below $100. I don't think we'll see that again anytime soon. So for Australian companies, it really depends on how long you can weather the lower prices. Someone like Woodside, who has no development underway, low debt, loads of cash, and are just earning money from low operating cost operations, they're fine. Santos has been the focal point for the share price falls in the bigger companies. It's down almost as much as the oil price, by about 50%, and that's because people are concerned that its cash flow will be eroded to the extent where it's going to have to do an equity raising to keep its investment grade credit rating. So,
and BHP?
BHP, they've got a fair buffer. What's the concern for BHP is whether they're going to be able to continue with their progressive dividend policy and maintain their investment grade credit rating. So for the company itself, no danger. It's just how they're going to be able to keep these commitments that they've given.
Now, the other big part of the story, of course, is the huge amount of investments being put into LNG in Australia, liquid natural gas. What does a fall of this magnitude mean for all of those forecasts for LNG exports?
Yeah, it's not good at all. Though you just see them constantly downgraded. There's a story in the paper today saying a $2 billion a year hit to government expectations. So, it's going to erode royalties for the state. It's going to erode corporate taxes, and it's going to erode PRRT, the Petroleum Resources Tax, which actually wasn't going to come in on these things for a long time, but it'll delay that. And that's because LNG prices are directly linked to the price of oil. So if you've got a 50% drop in oil prices, you've got a 50% drop in LNG prices. So
that's a massive hit to specifically Queensland and WA, right, with those two fields coming on.
Yep. And for the government too, because all that lost revenue comes straight off the profit too. It's So it's bad for corporate taxes. So
it all kind of hinges at the moment on OPEC, or does it hinge on a lot of these sort of US frackers?
So many things it's hinging on, and also global demand too. So I guess it hinges on OPEC as long as OPEC steps back. I mean, if OPEC came out tomorrow and said, okay, we'll cut production a bit, and the price would shoot back up. So, but it's really on maybe these higher cost producers feeling pain is what it's going to hinge on, I think. So when we start to see prices work through to the point that some of the shale producers are actually losing cash, they'll take off production, and prices should start to come up.
Because there isn't that big a gap between the supply of oil right now and what the consumption is. I mean, it's something like 2 million barrels a day or something like that. So, so it wouldn't take much before you reach a kind of parity, and then once you've got that, surely people are going to think, well, it'll go back up again.
Yeah, I mean, that's about 2% of world production. So it's yeah, that's right. So if it happened quickly, that would be the case. But I mean, there's so many other factors. There's a lot of the US producers hedge out for a year because that's about how long a shale well goes at maximum or strong production. So that's a factor. All these guys are reducing costs. They're squeezing their contractors, their drillers. So that's giving them a cushion. So it just takes a while to work through all of that, which is why you see more and more people say, well, it might have to hang around $40 or $45 for the rest of the year to actually take, get rid of the hedges, get drilling contractors down as low as they'll go, and and start to take things out of the market.
Finally, Matt, do you think that now we look back on it, that in fact the oil market and probably all commodity markets were actually in a bubble? We didn't realise it.
It's a great thing to say in hindsight, but well, the other thing that's not being looked at is demand has come off faster, especially from China, than most people thought, and we're still seeing it as the new year comes on. There's just pessimism around Chinese demand, and without that, and at the same time, I mean, in hindsight, you look at what's happening in the iron ore market, and with just complete new supplies flooded on, the prices were too high, and well, BHP and Rio were saying as much when they were up that high, so nobody should be too surprised about iron ore. And I guess in hindsight again, you look at what's happened in the States, the production accelerated faster than anyone thought, but I mean really when you have a country go from zero, or not zero, but I can't remember what they were, but up to 10 million barrels a day, and equivalent of Saudi Arabia in a short space of time, it's going to hit the market.
And there was plenty of money as well washing around, cheap liquidity to fund these projects too. So
that's the other point which we'll have to work through in the States. I mean, there's still a lot of people around lending money. So,
Matt Chambers, thanks very much.
Thanks, Jackson.